right, and hello and welcome everyone to the Tuesday pre-open here show. It's a big week. As we know, we've got debt ceiling. We have the price of eggs going up. We also have, of course, the stock markets around the world at a very, very important point. It is going to be, like, I would say, one of the biggest decisions actually we've seen, well, definitely for 2023, and actually a critical point in markets realistically around the world. So let's bring ourselves over to the US 500. First up, I always like to ask you guys out there what you think is going to happen this week. Are you bullish or bearish? Let us know in the chat right now. While we're there as well, we'll say a big thank you to David Rio for becoming a new member. Do remember you can get 3 free trading cheat sheets if you're interested by clicking the link. And we've got Gary, Christian, Brad, Ryan, and Jason and Jules and Deborah joining us here early. So thank you very much to the already many, many hundreds of you that are joining us. So let's hear what everybody thinks is going to happen. A few people are saying bear into bull. A few people saying bear. And yeah, Gary would like a poll. I tend to agree. Let's get the poll out. Let's bring a quick poll here. Bullish or bearish this week? Talking about stocks, obviously. Here, not necessarily crypto just yet, but we will be covering in today's show, of course, stock markets. Then we'll be covering commodities, currencies, and we'll move on into some crypto stuff a little bit later on. So let's begin by discussing the current level we're at. And I think this is a very important zone. Make sure to fill in that poll just before we get into this bit. But basically, we have the downward trend line. The trend line that stopped everything in action in 2022. It's been talked to death and everybody is talking about it. You know, when they say sometimes that if everyone's discussing something, then you might need to, really consider whether that is the key level. Well, that's what we find ourselves in right now. I think a lot less people saw this. A lot less people saw, these ones as well. This one now has become incredibly common. And there's a few reasons why. It's because it's such a stacked zone. Almost everything's hitting on it. We've got a daily 200 DMA or daily 200 moving average. We have the downward trend line. We have a Fibonacci pullback that sits in here, a psychological level. And of course, we go into trillions of dollars of options expirations as well this week. So I've got here on the chart most of the big unfilled gaps. So let's talk about the first ones. If we go bullish, what are the 2 key levels that we're looking at? I think one of them is going to be that 40-40 zone and then 41-13-ish, okay, which is the gap fill and also those taking those highs and getting back into this high. So I think that's a very fair assumption. If we get another bullish session, even if there are pullbacks, then it seems very likely we at least want to go to the 41-13. If we end up closing above that, then we go towards these areas, 42.20 and 42.83 to the 4,300 zone. At this point, many people will be losing their minds. I hope many people in this community won't be losing their minds. Remember, trading and investing are different. If you're here to invest and it goes up there, you're going to feel a lot of FOMO. If you are somebody that's just trading, all you want is, of course, the volatility going in and up there. And that's really the major thing here. Barry says, not sure, will depend on if we break or hold the major trend line. I think the trend line's one component of it. I think the options is also a big component of it. So to the down low, if we do end up shorting off, what's one of the key areas that we're going to be looking at? And that's 39.18. Basically, it's a gap fill zone. We've gone up now for 1, 2, 3, 4 sessions in a row. Now, I will say this. It is rare to go too many more than 4. If you think back in history, let's have a look here just together at some other sessions. If you think back in history, here's 1, here's 2, here's 3, and there's technically that kind of next day that opened up and then went down. So yeah, it did end up rallying. So there's 3 into the 4th. We've got 4 here. We've obviously got 4 here. We have 3 here before a red one. And then there's some epic ones that sometimes you go on. But in general, 4 is pretty good. Is it unheard of? It's not unheard of. It's just statistically less likely once you start getting past these points that you won't have some kind of pullback. And part of that reason is because you end up having a lot of overbought statistics. Now, I do want to check out the FTSE and I want to check out the DAX with everyone here in the community today because I think this is really important that we understand this. The FTSE's made all new highs. That's the UK 100 for anybody that doesn't know out there. The next one is, of course, the DAX. And the DAX has made new highs off recent levels. And more importantly, everybody is trying to short it. So that's a big thing in terms of some of the discussions we'll be having in today's session. Let's move down to the 2-hour here and understand what happened. We have a high, we have lows, we obviously have a higher high. If we do breach this area down here and we move into 39.40, which is a key level, and we move underneath this, and then we start rallying past that point, which is probably what I would expect if we do end up going bearish, to move underneath 39.40 and then push towards a rally. This would be a fairly decent short zone. And it's because you will have seen the inklings that the market does want to go short. Let's remember where the options are this week. And, oh, I haven't actually put the poll in. There we go. Sorry, guys. I don't know why it keeps erroring. Hopefully it went. Did it go through? See whether the poll went through. Oh, I think it broke. Put it back in. There we go. Hopefully that went in. It just says error occurred. Must be something wrong on YouTube's side. There we go. The poll's up. $7.77, $4 super sticker. Thank you very much, Sandola. Always appreciate your support here on the channel, man. But yeah, this is a pretty trappy week. Jacob says it's trappy week as always. Well, it's the third week options expiration, so we've got trillions of dollars at risk as well as everything else. So certainly a few things on the table in terms of what our expectations are of these markets. So yeah, it's going to be tough for sure. It's going to be tough. Just quickly setting this last bit up here, and we should be ready to go. All right, so it's in there now. It's all working. Fantastic. All right, so yeah, this is one of the toughest calls I think we're going to have to make for a while in markets. And you could say it's trappy always, but I really do think it's a very tough market. On one hand, you could make a great case for bulls. So many people are bearish. So many people are seeing this level. Why not continue to push higher, push into the 4113s, even the 4300s, then potentially topple over later? I think you've got to be prepared for both sides here because we don't exactly know how this is going to react. And a lot of it has to do with the way it came in. Think about the traps that have been set so far. The market made one of these style rejections. It basically shooting star rejection the market. That happened literally last week on the Monday session where we went bearish. Then a lot of people will have gone short here and they've been squeezed. That's literally what the market did. So clearly there's been a lot of bearish sentiment through here. Now, rightfully, I guess, as a community, we've been bullish into this zone. And if the market had come up basically 1, 2, 3, 4, 5, or 1, 2, 3, 4, bullish, bullish, bullish into the market here, it'd be pretty easy to go short. It'd be much easier. The way in which a market hits a level is also very important. Then we consider what's happened since this point. We've seen shorting, it's come through, it's then made a higher high, and it could look like some consolidation before potentially the next move. Whether that move is bullish or bearish, of course, we'll find out over the next coming session, really. This session, next session. We've got debt ceiling coming up this week. As we know, a lot of people are making a big deal out of that. My opinion is don't look into it too much. It will be what it's going to be. So with debt ceiling, people want to go, oh, which way should it go? Often it will do the exact opposite of what you think. And that's because it's already priced partially in. Remember, the debt ceiling is not an unknown thing. The market knows it's coming. The market freaks out if something happens that is not expected. So let's say they came out and said, "Oh, hey, we're going to default." Of course, the market will freak out. Expect a third of the entire market to be taken off in the next couple of weeks past that point. So a whole third of the market will get wiped. But that's one of the big story discussions. Then, of course, on top of that, we have earnings. So we have all of the earnings stuff coming through. And if we look at the earnings, as we know, the big ones are going to be what we've seen so far, which is your Goldman Sachs, your Morgan Stanley, and then later on the week, Thursday, Netflix. So Netflix is certainly, I think, a big one because that's going to show us the start of technology. And once we've seen the first two, usually in technology, which is usually Netflix and Tesla, we can make some assumptions about what's going on with the rest. We know demand's definitely dropping for Tesla. Otherwise, they wouldn't be cutting cars between 3,000 and what is it, like almost 20K discounts. So huge discounts coming in from Tesla. We saw that with the end of the financial year, with the end of the calendar year, where Tesla was literally offering $7,500 off if you picked it up before the end of the year. Now they've got steep discounts coming through. So clearly demand destruction is underway on the top end. It just doesn't seem to me like it's on the bottom end yet. Either way, Netflix and Tesla will show us a lot. So let's now move over to this market, which is, of course, the US 500. And let's have a look at what this is doing. So some people are mentioning pendants. So they're basically drawing between these lines here, and they're drawing the bottom end like this, and they're saying, look, it's trapped in a pennant style situation. You could definitely make an argument. You could say, well, all right, we get a new low. We've broken the pennant towards the short, moved down to 39.40 for the session. Nice. And I think that's fair. This is clearly, it is clearly becoming quite coiled ahead of this market open. So that is something that's there. Again, we have the highs, we have the lows, we have the higher highs on the futures market. So we can see that. And there's a case to be made for both bullish and bearish. And that's the problem. If it breaks out, don't be surprised to hit into the supply of 40.40 for the intraday, and then potentially the next couple of sessions at 41.10 plus. If it breaks down, I'm expecting 39.40 in the intraday, down into 39.20 to maybe even 38.80, and then a rally after that, most likely met by sells, somewhere around that. Now, the reason why I'm saying there can be a rally if it does fall off, it has to do with options, what we talk about here on the channel all the time. Options, is something we always discuss. And the reason we discuss it is because it's super important to weeks like this. So I've pulled up here the options moving in this week, and you'll notice that we have some key things going on. Firstly, way too many puts. We first alerted everyone to this, I would say 2 to 3 weeks ago, maybe even a little bit more. And did anyone in the community, did any of you guys use this information yourself to make a better case for the market to go bullish? Let me know in the comments. I'll read a couple of comments while I wait for that here. H8 says debt ceiling means nothing. It will always be raised. US. Okay. Yep. And we have better trading returns. Okay. Yep. Fair enough, man. Yeah. Look, they will raise it, you would think. So I don't doubt that. And anyone that says that the US government will go bust first, or especially the Federal Reserve will go bust first, no, that's not how it's going to work. It would be, Europe, Japan, other nations. There's many others that have much weaker economies that would be more likely to have problems. That being said, the debt ceiling is still an argumentative piece of information where people go crazy about it. The news will go crazy about it, and it will end up creating, of course, some volatility in the markets. How do I find that chart? You can literally go over to maximumpain.com. That being said, people get too caught up with the idea of the max pain component. That's a perfect market. That basically is saying if Wall Street and if everybody else was writing options, The perfect level for them to close it right now would be 390. But what you'll notice, the reason why I want to bring this up is because look at what's happened in the recent days. 390 puts have become bigger. So what that's telling you is if this market does go short, it at some point around that 390, 388 kind of area, will probably want to go bullish because the perfect scenario for Wall Street this week would be either to push, well, I think it would be to push a negative narrative early, get puts put in the system because retail traders tend to start trading very, very early, push back up, and then close somewhere in here. Now, if they did that, perfect. Exceptional work. Great work, guys. It's a perfect start to the year for everybody here. Now, if the market does go bullish, where do we cap kind of our expectations this week? Probably 415. We can't expect it to be past 415 because as the market goes up, this will grow and more people will buy 415s and 410 calls. And you have to expect these to spike up pretty heavily. So leading into a 5.1 million option week in terms of orders, it doesn't seem likely. Well, firstly, sad face for these guys. They didn't know what they were doing. But, I could have told them that a few weeks ago. It's very unlikely they get paid. It's not impossible. Things can happen, but it's very unlikely. So that's certainly a big point of it. Now, a few people have been mentioning DXY is dropping, so therefore equities are ripping. Yeah, I wouldn't say that I'm a huge believer in the idea that dollar index is fully synced to the market at the moment. This is partly debt ceiling, partly interest rate cuts in the future, and partly, of course, the Federal Reserve being the first to make the switch. Now, here's the thing. We are at critical points. We know we broke the trend line, which everybody's talking about. Again, this trend line is not hard to see. Everyone sees the break of it. If it's going to be a false break, this is the week. Because generally speaking, it will come down, it will hit this level. I would have liked to have seen it wipe this level. So kind of like that. And if it wiped this level, then move forward. That would be fantastic. Like a really nice trap like that. I'm not unopposed to the DXY actually going bullish from here. This is where you take profit. If you're in a position, you would definitely descale some of your position around here. So effectively, you're looking now at a market where it could be inverse head and shouldering, small time frame. You've obviously got great base here. So drop and a base and then a drop. So if the market does rally, you've got great short potential at 103. Don't get me wrong. You've got potential here for a breakout, and you'll see the alert that I've got at 102.40. There's a reason for that. And if it pulls back after that, for then some buyers to come back in, 103, see what happens. If it breaches past 103.25 to 103.50, you're probably actually going long on the DXY. And the chart's not telling you to do that yet. In fact, this chart is only short right now, other than it hitting a demand zone over the left-hand side or a support zone. There is no reason at this time, at this recording, for me to say, oh, this thing's long. But I do think that it's got potential. And obviously, if you're sitting there and you're looking at it and you're thinking debt ceiling is going to make most people believe the US dollar is weak, that's going to be the story that everyone's talking about. I just think that is. And because that's the story that everyone's talking about this week, it's going to make a lot of people try to go bearish. Sentiment will shift because recently, remember last week I told all of you that on the euro, what were people doing? They're all trying to short it and long dollars. Well, that's now shifted a little bit. In fact, it's shifted between 20 and 30% now are trying to buy the euro and short the US dollar of change. And if retail traders are doing that, well, there's a good chance there's a bit of a trap going on. So you guys have voted 58% bear. We're going to close the poll. 58% bear. And it turns out 42% bull. So bull is a little bit less favored than bear this week. Bear favored 57%, bull favored 40, well, 58, I guess. Bear favored, bull favored 42. So You're a little bit more negative than positive, though, I'd say, because of the community. Maybe I'm lining this 4,000 up, so you're going to be more negative in general. So, yeah, DXY, great key levels at the moment. Of course, if you're bearish, I don't blame you. If you get a new low, be very careful around here, though, yeah? Because yes, you could say people are seeing this, but I think a lot of people are focused on something that I've brought up, which is that trend line. So, key level, I'm more interested in having patience here to react. This is when I usually don't get involved in a market. In fact, I don't even want a DXY position yet, but I would love to get one should we see the right things. Really would like to do that. Golden Days and Nights says, at what point does paying interest on a proposed higher debt limit and what rate? Oh, you can't become unserviceable. You can't actually figure that out because there are other ways and means to kind of, let's say, stuff with it. Yeah. I'm not even, again, the thing is, Golden, is that a study that is worthwhile thinking about to give you edge in trading? There are great comments, and I really want to say this to the community. We've got 1,200 people here. I hope this helps you. In trading, I've learned many things, but I'm going to give you a little bit of my knowledge here of what I've learned. Ask yourself always critically, does something give me edge? Is it interesting? Is it funny? Is it educational or something, or does it give me edge? And until you realize that you're looking for edge, you're looking for something that actually gives you some form of potential success in the market's potential ability to replicate that concept because you want to replicate it, then you will start to be more successful. It's about being patient, sure. It's about reacting and not predicting much, sure. But realistically, you've got to think about things critically. Does it even give you edge? There is so much stuff thrown at us. The news, Twitter, YouTube, most things don't give us edge. They just don't. So you've got to bring yourself down to only a few parameters. In fact, I have a rule. I don't add any more than 12 parameters. Now, you might say, well, how do you get new stuff in the future then when you find out about something? Well, I ask myself the question here. I've got a Cocoa Puff brain. My brain is not smart enough to take on too much. We have to keep it simple, stupid, yeah? Or simple, smart. So if I have 12 parameters, for me to introduce a new parameter, what do I have to do with one of them? I'll let someone in the chat answer that. What would I have to do to get another parameter in to my trading system if I only can allow 12? Drop one? Yeah, that's right, AK. I'd have to drop one and then add the new one in. So I still want only 12. So one would have to come out and one would go in. So I've got to really critically analyze that and figure out. Now, you don't have to have 12. You could have 7. You could have 5. You could have whatever. But what I guess I'm getting at is that most information doesn't really give us much. I tend to really like certain data stats, as you'd know. I tend to really like seasonality. I tend to really like sector rotation, and they've all treated me very well. I also like certain parameters, yield inversion. I also like certain fundamental numbers and things like that. But I'm not sitting here saying that the debt ceiling is something that I want to work out. And it's not to single in that, but you just can't do it. If you do that, you'll end up in a tangent trying to work out things. It's like people say to me, well, Tom, why don't you do more fundamentals? And I say to everybody the same thing. Why would I do fundamentals when I can get forward PE and other metrics from large banks that pay some guy $400,000 to do it for me, and then I can take him and all of the others, average them out, figure out whether business is good or not generally, and then do TA to get myself edge? I just wouldn't do it. Now you could say, but Tom, you could understand the company better. But I don't care to unless you're investing in it. If you're investing in it, you got to deeply understand it. But if you're trading it, you don't have to as much. So I think it's really important to figure out what your edge is going to be, solidify it, and then maybe have some clarity on that. And that's always good to have there. Let's see what your comments are here. Remove and replace one or rewrite the rules for a circle and make it larger. I don't really want to make it too much larger. David Taylor says, hi, Tom, can you analyze the euro US dollar? Yeah, we can do that. And then Samuel says, follow Nancy Pelosi's trades and stop thinking. Well, yeah, it's not the worst trick in the book. Hey, people have built business sites out of following Buffett stuff. Not that Buffett stuff's like it used to be. But yeah, people built that years ago. And now obviously Pelosi's well known. Though I will give you a hint. Pelosi's not the best political trader. There's actually a few others that have done better than her in the old politicians. There's a few that have there's a few other ones that don't get as much limelight that have got a little bit more cheese each year. But yeah, invest Kramer. That could be an option. All right, let's move over to a couple of pairs. So US 500 firstly, just again, we're stuck in a bit of a pennant. If you load in, you'll see. I'm liking 39.20 gap close at some point this week. I'm also thinking that if we do make new highs today through the session, 40.40 seems kind of likely from a technical perspective. And if we make new highs, I'm leaning towards further breakouts towards 41.10. Then possibly if we breach that zone, 41.10, 41.40, then I'm actually leaning towards just underneath 4,300. And I believe people will lose. This is where they lose the minds. Okay. This is where they go crazy a little bit. This is where they go absolutely insane. And this is where they start shorting and get squeezed. So I'm leaning towards bear, 4 days up in a row, pennant, obviously, probably biased towards this level. We do have wicks coming in that make it look bullish. We do have reasons to say that it could go bullish. I'm prepared both sides, but I am leaning bear this day. If you wanted to ask me, hey, that's what I'm going to say. Today, yes. Rest of the week, depends how it plays out. And it's just a pure stats game. And again, how you take it is very important. Do you do it with an option? Do you have a certain trigger level? All these types of things. It's a 60-40 style day for me. It's not an exceptional day of trading, as far as I'm concerned. Let's move over to the euro here because we've got a question about it. And I think it's pretty relative to discuss the euro here. So it's been very bullish. And if we look at a daily, I don't think anyone would argue that this has been in an upward trend. And some of the shorts that you may have taken in here, you may have tried to short it off. Maybe in here, you may have tried to. But when it moved through here, it was always going towards these zones. We find ourselves at the DXY support and the demand. Obviously, to go short here, you're going to need a little bit. We haven't seen that yet. So we haven't seen huge shorting. I'm going to look at the dollar index to figure it out. If the DXY goes bullish, the ways we discussed only a few minutes ago, the euro would go short off that zone. This wick zone up here is very interesting to me because this will mean a new low formed on the DXY and super wicks that led on to a massive fall, which generally means the orders that were placed in this area were strong. Like they were big and they led to a massive fall. So I think that's also important to really consider. But yeah, euro, it's just in that area. Aussie as well. We've got a bit of a downward trend line there, and it breached it before, but as you can see at the time of this recording, it's sitting right on it again. So breached, closed above, came down, sitting right on it. So currencies DXY this week, definitely the chart of choice. Abby says we have a brutal bear trap, and now it's time for a brutal bull trap. Potentially, yeah. That brutal bear trap, I know the one you're talking about. Down the bottom there. Anton says, I won't look at those types of marginal stocks too much, man, if that's okay. And Matthew brings up the Bank of Japan could cause some mayhem tomorrow in currencies for sure, possibly even in stocks. For anyone that doesn't know, obviously they've got a big discussion. Now, generally speaking, they don't tell you the time. So with something like the Bank of Japan, it's usually between 1 p.m. I can give you Australian time because I know Australian Eastern Domestic Time to 4 p.m. Australian Eastern Domestic Time. Okay. Once they are coming out with basically some pretty big news, and you'll want to have that on your economic calendar, and you can see it here. So there's the Tuesday, and there's the Bank of Japan press conference. Now it's going to say tentative, but I'm telling you it's between 1 and 4, and in general it's been around 2 to 2:30 p.m. AEDT, okay? I don't know why they do this. I think it should be almost illegal that you have a press conference with a result release without having a time. I think that's just crap. But anyway, that's what they do. They've done it for a decade plus, and there's other central banks that do it as well. I just think they should give times. Credit to some places they give actual times. That would be nice. This tentative crap. What is this? No one likes tentative crap. It's a question of credit. Am I bullish or bearish on SPY currently? Well, I've explained it quite a few times. I'm bearish at this level, I guess. But yeah, not really heavily bearish, because you can't be. There's too many options that's set to expire. I'm willing to take both sides. I would literally be willing to go long. I would like to see that. I would realistically rather be patient here and wait for the trigger than necessarily pull triggers around here. But very, very key level, no doubt. So far we've covered the US 500. Let's have a quick look at the VIX. A lot of people sending in messages about the VIX saying, what the hell is things at 18? Well, it is up today. It's at 20 again. So we're back at 20 for the VIX. We did hit pretty much a low since January of 22. So since all of this kind of began, which happened realistically here, we're now at a point where we just kind of reached it again. Now, we do expect over Q1. I shared this over on Twitter, so make sure to follow us over on Twitter, guys. And you like this one? I like that one quite a lot. Thank you very much for sharing that in the room. It's pretty funny. Chickens after the price of eggs went up. But if we have a look here, this is the average VIX calendar for 2022 overlaid. And you can see here the average VIX in general over time. And I think it's a pretty important chart, because what it shows us is it realistically tells us that, during periods of years, Q1 and that Q3 area, so Q1 and Q3 tend to have VIX spikes. And I'm going to get the numbers, but yeah, on average, it's 20. Obviously, during bearish years and coming off bearish years, you do tend to get bigger spikes. But February is usually the bad month for the Nasdaq. And, you can get some weakness as well through March. This is what happened, I guess, VIX in 22. So you can see VIX's drops and highs, and it went in January. But do remember, we've got the trifecta coming in as well. So this is something else that we shared on our channel, which was here. And that was, if stocks are down the previous years, this trifecta is very bullish. Santa Claus rally, it's positive this year. First 5 days, it's positive this year. Then we get January return. We don't know if it's positive yet. At this stage, it's about 3 or 4% up. And then previous year returns negative. Well, the stats don't lie. It's never been red for the year. Wow. Pretty crazy. Quill Owl, $10 Australian. Thank you very much, Quill Owl. Appreciate that. Thank you, Quill Owl. The Chart Junkie says, where do we find Stanley Druckenmiller content nowadays? He sometimes goes on shows and stuff. He likes to hide from the media. Yeah, he doesn't need to. He's rich, man. He doesn't need to go into no media discussion. He does go on shows, but what you'll find is that with Stanley, he'll come out and say something. Problem is, you don't really know what he's thinking. There are he'll do random interviews. If you want to watch Druckenmiller interviews, he will do really interviews with like alumni and other kind of little random people around the world. They've usually got like a few thousand views on them. But yeah, Druckenmiller's the real deal. He's legit. He's awesome. That's why he got 30% plus for like 30 years in the markets, while everybody else couldn't do that. And he's also a legend because he quit doing money management and said, you know what, it's too stressful. That's what happens. You scale up, you can't keep doing it. The bigger you go, the harder it is to continue to make money. That's the one advantage so many of us have. We're not managing $1 billion or even $100 million. Once you start getting scaled up, it is harder to get exceptional returns. All right, let's go through some quick fire here. We've got about 23 minutes till the market opens, so we'll keep going through. We'll start off with just doing the DAX. I just wanted to mention this again. Very shorted index by futures traders, and they're getting absolutely ripped. If you think about the gains here over the last couple of weeks, over 9.5% on the DAX. So big gains, pushing really high. Let's have a look at the daily just to see where we've made ourselves back into this structural zone, which led to that huge fall, but we've made it all the way back. Now, if you click on the UK 100 and you bring that up, that's the FTSE, you'll notice all highs here. So this is a new all breakout. And again, a lot of people are looking at this. Now, I said this in the private community stream I did today, and I'll still say it. It's interesting how things happen, yeah? So first up, we got that false break, and then it just completely ripped. But now we have a break up here to this high. And if we scroll through, you'll notice it's not quite making all-time highs yet. So I'd kind of love it to make an all-time high, so everybody starts talking about that. All-time highs during the pandemic. How's that? I mean, not during the pandemic, during the recession. How good's that? Amazing. This is crazy. And then all of a sudden it drops off. But imagine if this did drop off. If this is a false break for the FTSE and it starts to drop, can anyone in the community here tell me what that would look like? Trader E says Amazon is coming to a very strong resistance node. That's correct, Trader E. It's pretty close to it. Electric Banana says, I'm glad if the S&P 500 reaches 4040 today. Well, if you get new breakout highs, you'd be pretty happy with yourself. Yep. Few people saying UTAD in terms of a Wyckoff distribution. Yeah, that's exactly correct. So it is a real possibility here. And if we look at the way that the market's gotten there, again, fairly aggressive, decent breakout. Like, don't get me wrong, few people mentioning it. At the moment, heavily shorted, has been shorted all the way since down here. Short, 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 short. People are just getting crushed. So if it gets a new high, that will probably crush so many positions in futures traders. And then imagine if that happened. You'll have a very good inkling, especially if it did this. What am I going to do there? I'm probably going to consider shorting it because at that point, you've got a high, low, higher, high. You've made a lower low. You've already done the shift. You can see that this could be turning into a UTAD as part of that thing. And you've got a much, much better idea here. Tim Jones says, love shorting gold miners here, going long bonds, going long international stocks. Yeah, so going long international stocks is an interesting one. And maybe we'll do a show on it coming up soon because, yeah, look, if you look at like an ACWI, this is the entire, world index. I can't remember if this is the world index without the US or with the US. I think it's with the US. 1 second. Anyone got me the code? Well, forgot it off my head. Maybe this one. Yeah, excluding US. So you can go like an emerging market or an excluding US. But what you might notice is 2008's here. Now you may assume that since that point of 2008, the market should be up. Well, if you look at emerging charts, so say like you look at an emerging market, you'll go back to 2001, 2000. And it will be the exact same level as back in 2000 as it is now. So that's 2 decades lost. Okay. Now they call it the lost decade of investing. And you've got to be careful because the US went into one obviously during 2000, technically to around 2008. It went down, it recovered. It never really made a high. It went down again to the same levels. Then it recovered huge and went crazy. 2 decades, this has been in a lost decade in terms of world emerging markets. So it probably does mean that the world trade could be an interesting trade over the next coming years once we enter into a new bull trend. And I think that's what people have been investing into. Well, I know they have because I've talked to a lot of people. And also, I think India is very interesting, but right now incredibly expensive. So it's an interesting concept. So you can even see here, even this one, like a little inverse head and shoulders here, fairly strong recovery, obviously seeing some inflows. If we are in a new bull trend, well, maybe the US is not going to be as strong. You can't expect things like Apple and Amazon and Google to have those quad digit gains like they used to have, those massive, massive digits. So someone mentioned before, is Amazon at its highs or at strong resistance? Yeah, it's around a key level. You'll notice the supports that you had last time, and then obviously this resistances. 109 is a gap fill, so you'd want to mark up 109, still 10% plus away. But all of this area here that's coming into around this $100 psychological, people will take profit here. Someone mentioned Pelosi took some money off the table on Amazon. Yeah, critical level, but it makes sense. Why wouldn't we be at a critical level ahead of a 4K S&P 500? So we've got about 15, 16, what is it, 17 minutes to go here until the open happens. Let's have a look through some stocks, do the rapid fire. So first up, we'll start off with Tesla. Now, Tesla's struggling probably a little bit, but it's also an oversold stock. We do have a fairly decent consolidation. You'll see the expected low and expected high for options this week. If we do tap into that 129, probably expect a little bit of a pullback through that, just because that's where the options are expecting some of those ranges. Plus, you've got a little bit of high resistance. 115 on the low in terms of potential 68% of the time is going to stay within these. That would be that market probably hitting, you would think, around that 3,900, 3,880. Now, do I like Tesla here? Look, I probably still see more upside than downside based on the charts. When I say upside more than downside, I think it's part of a rally that then goes bad later on. All right. That's what I actually think happens here. And I like these accumulations. And the longer they accumulate, the better they end up looking. The more I get convinced that actually it's a real accumulation. But I'm still not sold on it not possibly going down to these 60s even. At this stage, I'm trading it. I think it's a good trade for long-term investors. You're probably loving it, but this is a significant zone down 62, and then of course a lot of people can see this one here, which is 91. Does it get through 100? No, not at the moment. Too many options. Again, refresh. We know the 100 puts are there. Over 1 million, 3.292 million units, and we've got tons of 100 puts. And what you'll notice is we're starting to get a bit of calls opening here. So each day, if you're a Tesla bull, you're going to want to look at your call openings, because I think there's going to be a decent amount of calls getting opened. And as they get opened, we're going to probably see some resistances around that point. So 129, 130, certainly an interesting strike this week. That's becoming the most bought call. And I would probably expect it to get continuously bought. These people have got rocks in their heads, most likely. That's a very bad idea up on those top ends. Kevin says Tesla really opened the doors for competition when they dropped their prices. Potentially. Yeah. And Dio says Tesla's range is trapped by options. It'll only chop around. I tend to agree. I don't think it's going on a big breakout if that's what you're looking for. Yeah. If you're looking for a big breakout, unlikely to get that from something like Tesla. Let's have a quick look at Apple. Weekly looks amazing for this. And it's why I do struggle a little bit on thinking that the market's going to stop at this 4K. And I've said this in the weekend video as well. Look at these rejection wicks. They're really nice. the way it flew through last week, the way it got to things, we've still got that unfilled gap at 143. Imagine if we hit a 4,300 or even a 41, kind of 40 or something, and we're hitting this gap fill. And then all of a sudden we can go back down. Yeah, look, you can't hate on the chart. The chart doesn't look bad, does it? If you were arguing the bear side, you'd have to say it's at the resistance right now, which is support, support, supply, resistance, obviously, is role reversal. So again, another one at critical levels ahead of this market open. So most of these stocks are at big zones, but if they break through, where's the next big zone? Quite far away. So again, breaking today is super important. It ends bullish. Well, we have a fair inkling that the market will continue to go up through into those areas. If it ends bearish, then we believe that kind of 39.20 to 38.80 zone, and then probably a buy off that to make sure the options expire perfectly for the big players this week. I don't see a gap fill at Apple on 143. What am I missing? Well, there's a closure here, and then it opens the next day here. Ricky Linda says last week felt the max pain being on point around and trapping. Yeah, look, I mean, a lot of you guys are really opening up to this idea. By the way, thank you, 1,400 plus people joining us here for this Tuesday Open. Big week, massive levels for sure. Uh, Options is key to the market. And once you do start to think about options, and we're going to bring more into the show this year, I really want to improve the option side point. I did have a question for you all as well. Would you like, I mean, maybe I was thinking on maybe Twitter or TikTok, maybe I'll get on there. I was going to start opening up, maybe doing shorts. Let's call it snippier kind of little bits of information, maybe a bit of macro or something really fun or something really, I guess really helpful for you guys, and then doing it like a 30-second or 1 minute video. I think you have to do it on socials. So would you guys like that? What would you like? Would you prefer it to be macro? Would you prefer it to be charts and then just have the chart levels quickly and then zoom them in and show them all very, very quickly? Let me know in the comments right now. I'm always interested to see what you do. Doesn't mean the daily show is going anywhere. I still want to produce that. It's what our core audience is. It's what we're built on. So we're going to continue doing that. 61.8 fib here for the US 100 as well. Key level. If we do get that little breakout early, basically it's already on the zone, but as you can see, it's hovering around it. So why I say it's already on the zone is here is the previous supports. Here is the current resistance. So look, we're at super critical levels and we're just coiling around. People are probably correctly drawing, these trend lines here, and they're basically saying, look, this is a pennant. We're trapped ahead of this market open. Maybe I want to see directional breaks and then take that. I would say I want to see a break of a new high, or realistically at least a low here to make any decision. We don't know yet. We just know we're at critical zones. Chart levels, how we added the daily shorts. Yeah, it would be YouTube shorts slash I guess the TikTok side of things, or whatever's on. I just put it on a few socials. Options on gold, please. Gold. I looked at it before. I was like, yeah. I know where strong demand is, which is like 1894. That's pretty good demand. Like good, decent for the longs. There's nothing much I really have to say about gold. I mean, it's still predominantly bullish. I would have liked to have seen it go down here if I was trying to go bullish again. I do think that this is a story narrative that's getting blown out of proportion and people are going to get bashed by it. But because I'm bullish gold. I've said it for months. I've been bullish gold. I'm bullish gold till the end of Jan. into Feb anyway, just because that's what I am. But yeah, I don't have a bearish signal on it yet. That's it. I don't have a bearish signal on it yet. Not on the highs. I'd like to see that level taken at least to go, potentially into the bearish signal. So yeah, nothing yet. 9 minutes till the open, guys. Let's go through some other things. Yields not doing much, but obviously we know they're holding their own as best they can. Markets coming in, lukewarm, I guess, into the session. US oil. Now that's been one that's rallying here. I could see oil breaking this, and then once it breaks this, all of a sudden us going back to 90. I had to flip my tune once this happened. I've been looking for 65 oil for, since $120 a barrel. And we almost got there together, yeah? I could be wrong, but look, we got into the 70, maybe. I think we got 72 or whatever it was, 71. I don't particularly think, because of the China reopening story, that oil is easily going to get there now at this stage. And China reopening is mostly the story here. I kind of feel like first you got to feel this level again, which is that 90 zone. So yeah, with oil, you look at it on a weekly or a monthly, and yes, I've been crapping on about it, but look at this monthly. Depending on how January closes, and I'm significantly serious here. Look at this. I mean, yes, that's a doji. This is a bullish hammer style wick though, and this is what it is at the moment. Now, we're still midway through the month, getting into the later end of the month, but depending on how this closes, will most likely shift my concepts on oil. I wanted 65 a barrel. I'm not going to say I didn't. My aims originally was 75 and 65 a barrel. But when I saw what I saw with the pickup, plus I knew that candle was there on the monthly and it went through 77, I have started to think, okay, well, I think the 90 is coming. What do you think in the chat? Can you update your thoughts on crypto since the weekends? Time is very short. Yeah, we can have a look at crypto. So, yeah, with crypto, we busted pretty critical level, which was here, which I talked about on the channel. Once that busted, my thought process was always 21K, which it hit. Now we find ourselves at 21K. It's pretty much a vertical line up, which is typical of crypto. It does these vertical kind of runs on it and then struggles after that. Let's have a look at some of the other verticals. This is the strongest bullish run that we've seen on crypto, I think, since the bullish runs on crypto. It's actually the strongest bullish run. It's not bad. It's pretty strong. And if we go back to previous history, yeah, I think it probably is the strongest bullish run we've had. This is back in 18. I'm going back into here. So look, my thought process is I still think if the stock market does end up falling over, crypto's coming with it. And I still think that 11.5 to 9.5 is very possible. Okay. That's between 83 and 86%. Now, for people that have picked up in here, I don't blame them at all if they're looking for the long-term investment. You're so close to those percentages that you've got to start thinking about your average in. Remember, that's percentage from top to bottom, which is 77, and we're looking for 83 to 86 or 83 to 84, 82, whatever it is. There's those 80s. So that's what we're realistically looking for. Now, I don't think anything's really changed, as I said, from my crypto perspective. So it's just realistically what happens around here. We broke this high, we started to slow down, and now I would break it down to smaller time frames. I would go, okay, let's have a look at this 2 hour. We know there's some consolidation here. We know we're melting up slowly. I think we do turn back over, but if I'm setting alerts for that turnover, oh, which one? I don't know. I probably need to see more. At this stage, you'd have to break past 20,250 or 20,650. So we could still see rip, but I want to see down, probably rip both of them, rally, then I'd short it. At this stage, I believe it's hit a very good take profit. 21 was a very good take profit. If it keeps running, I wouldn't jump on board the gravy train. Next stop, if it does bust this, 20. Oh, is it there? Probably it's here. Could be 24,000. Suck even more people in. That will happen if the markets do end up going bullish. Inflation expectations will trend up. Markets will trend down. Potentially. All right, we're about 3 minutes off the market open here today. Again, for anyone that's joining us late, thank you very much to almost 1,500 people joining us here today. We've got a trapped pennant breaking slightly higher here for the markets into the open. We're effectively putting pressure on that 4,000 upside. Most people are probably bearish around this zone. I don't disagree with them. It was always a zone that we thought would be hit. Then we would think there was going to be some bearishness. 4 days of bullish buying coming in. If we do end up seeing an early market breakout that goes past, let's say, this 40, 15, 16 kind of level, 40, 40, 40, 50. Once we're up in there, I think any pullbacks go towards 41, kind of 40. So very, very careful around here today. At the moment, we're going in. We're only 2 minutes off the open here. So obviously, it looks like it's trying to do that rally. Mondays, e.g. in this case, Tuesdays, can be very, very tight. For anyone that's asked as well, a few people have said, when are you going to be doing the draw? We will be doing the draw in the pretty soon. So don't worry about that. The draw will be done. But it won't be done today. It'll be done in the Tuesday after close video. So don't worry. The free prizes will be given out as per usual, and we'll do that around that time. So all good. Thank you very much for anyone that entered, and thank you always for the support. So markets today, moving in 2 minutes away. VIX is up. We're sitting around a 20. Expect the VIX to potentially lose its control, like put call ratios this year due to the single day options. So just be careful around the VIX and how you interpret it. Obviously, it's another day of copper, commodities in general, US oil, copper, metals, all of those things on China leading into the Chinese New Year. Huge demand. Often it slumps afterwards. So be very careful about the after China New Year slump that does happen in commodities. If you're commodities traders, natural gas barely finding too much bid, but obviously all there. Can you have the free prize? Well, if your name is drawn, then sure, and you entered. Tips to provide income and price appreciation with low vol emerging markets. Provide beta and value silver to store some hard earned. Yeah, so tips, well, or any of the bonds. I mean, if you look at the bonds in general, the treasuries still should be pretty good, even if they go down this week. So we enter into this market, guys. We're only about 1 minute off. We've covered today the S&P 500. We covered Bitcoin. Thoughts are most things are at critical. Crypto is at critical. Stocks are at critical. Some of the individual stocks are at critical. Metals are running into Chinese New Year. Dollar index is an incredibly important demand zone. I think if I was to pick a chart of the week this week, other than S&P, I would say it's DXY. I'm going to be watching the US dollar like a hawk. Debt ceiling will be the story that everyone's talking about. I think it's crap, but let's face it, it will create volatility, or at least a feeling or effect of volatility. Look at options. Friday expiration, 5 million plus options. Follow the daily show. We will be covering everything we can about these levels. We open up here. It looks like, well, there we go. We got ding, 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 just above 4,000. To put a new high in, we're going to need a 4,007. But yes, coming in bullish here into the session slightly. And if you look around some of the stocks, you'll notice that it's Nvidia 1.11, Apple down a little, Google down a little, Microsoft down a little. So it's not across the board in the big tech stocks. It's probably a bunch of the more defensives. Let's have a quick look at actually which sectors are doing best. So I'm just going to load that up right now as we open up. And I can tell you that it is, looks like hypergrowth. It is clean energy, energy, solar, and staples that are leading us. So these are the sectors that have come out the strongest for the session. Communications, financials down the bottom. And do remember as well, speaking of financials, earnings, remember Netflix is, I think it's Thursday. So Netflix is Thursday. Make sure to get an economic calendar. One of my favorites is Earnings Whispers. I'm not affiliated with them. I just think it's cool to have little images and it makes it simpler for our brains to understand these ones. So Thursday is Netflix Day and the banks, of course, coming out today. QQQ are up massively 0.04. Yeah. So the QQQ is not up much. US 500 is obviously not up much. We probably will see true direction realistically very, very soon. So it's the hour of power. It's the hour of, well, not the hour of power, it's the hour of retail. This is where retail makes the mistakes of Monday. Remember, human psychology is this: get paid Friday, go all in on Monday, Tuesday. Yeah. So in this case, it's Tuesday is the Monday. So people have been getting ready for the weekend. They're ready for the stock market. They go all in. That's what they do. I know because I've trained a few people, and also it just seems to be that basic human psychology. People love to do that. They love to get a little wild. And yeah, here we go. So basically, this market's just stuffing around at these highs. Got some rejections coming in. If we look at it on the smaller time frames, very small rejections, nothing of note yet. Go down to something like a minute, see a little bit of rejection. Suddenly we're sold off from that point. S&P down under 4K. But still very, very early days. So you're really looking, I think, for the DXY as well today. So you're looking for a bit of a combo. I know I've said they've disconnected, but I do think the DXY will be an interesting one to see whether it can find buyers here. So like you've got the SPY effectively at critical. You've got the dollar index at critical. If it starts to recover, then and it starts to break through 102 kind of 40, you get an alert like that through the session, and you can probably say that there's more to come downside wise on the S&P. Now we've shorted off a little bit stronger for the Nasdaq. JR says, Tom, what to make of the semiconductors? We'll have a quick look at SMH to finish up here for sure. Check that out. Semis just back to a nice level, aren't they? Let's have a look at the weekly to start off with. A lot of gaps, but that doesn't matter. It's an ETF. Not much to say, really. I mean, quite a few up days. That would be something I would say here. Semis obviously getting a nice rotation into them. It's 1, 2, 3, 4, 5, 6, 7 kind of sessions going up. But yeah, nothing huge to note here about semis. Just back to resistance. I'm not, if they break out, you're really looking for this red line 246. So yeah, I don't think semis don't interest me too much. Someone said shop is starting to break out of a channel. Let's have a look. That's the weekly build accumulation. You can tell though that this stock, it got brutalized, and it is definitely in a very fair value zone for it. And what you'll notice is you're looking for volume on these. So you really want to see volume, and volume was accumulated quite heavily. It's still at slightly elevated prices to where it was. That's a good sign. Notice people weren't buying here. Who was buying here? Not many. Who was buying here? Big players that missed out. Big players got in, big volume, Wyckoff's law of effort, continued big volume. That's good for a build base. So yes, I would agree that shop is in a decent build base. All right, guys. Well, look, good luck, of course, for the session today. We said it at the beginning, and I guess I'll say it again. It's 4 days bullish up. We're at critical. I wouldn't be surprised potentially to see some weakness through the session today. If we do end up breaking higher, though, any pullback should theoretically be met by movements up to the 31 kind of 10-20 zone to fill that gap. So make sure to price up your gaps, price up your key levels, have everything prepped for the week ahead, know where your options are. And this week is massive options expiration. Don't fall into the trap in the future. If you get one thing out of today's video, it's this. Everyone was bearish. Everyone. The market will not, generally speaking, want to pay them out. That's why we went bullish to this zone. I'm not going to say this zone is easy to deal with. It's one of the harder areas that we've seen now, I think, for the last 3 to 5 months. Very, very tough to call either way here. I've been racking my brains about which way I really wanted to go. I wanted to short pretty hard. The way to do it, obviously, was going to be options. But now, because of the way we've broken in here, because of these options here, I think that I can be patient. I can react to the situation as it plays out. So always remember, you might have plans, you might have concepts. You've got to focus on following your own rules and setting it up that way. You have a great week, everybody. Thanks so much for being part of the community. We've got heaps of great content coming this year. I know you want more out of these streams. I've heard some of the feedback. We will do better. We're going to get a whole bunch of new stuff coming as well. I'm super excited. And I do want to just ask as well, is the audio nice and crispy today? Is it pretty good? Should be pretty good. I want to just end there to make sure it's good because I was working on it and I do want to make sure this thing is clean. Yep, it's coming through okay. Good. Perfect. That's good, guys. That's the first upgrade. All right, more coming soon. Thanks so much. You have a great session, great week. And don't worry about the debt ceiling stuff, okay? People freak out. Trade what you see. Use your edge. Your edge is in the charts. Your edge is in understanding data. And then from the other perspective, build your system around inputs and then just consider to just continuously replicate that like a machine. All right, bye for now.